In this video, I'm going to show you 2 easy steps you can follow to get the perfect entries. The first is a liquidity sweep and the second is a fair value gap. When we combine these two together, you are going to see how you can enter the trade. Let's get straight to the video. Alright, so what we want when we have a trend going like this, or when we have a trend going to the downside, we want to wait for liquidity to be taken. As soon as liquidity has been taken, we are going to wait for the first fair value gap to form, and then we are going to take our entry and target a 1 till 2. So how this will look is when we are in an uptrend and price does this, we are going to wait for some sort of liquidity that has been taken when we looking for a reversal. So we want this high to be taken out and then continue downwards. Same with vice versa. When we are in a downtrend like this, we want to wait for price to take this liquidity right over here, and then we want price to reverse to the upside. So literally the first fair value gap that is going to form right over here and right over here, we are going to take an entry, and a more conservative entry is if we're going to get a market structure shift. So I'm going to show you an example without the market structure shift, and then I'm going to show you an example with the market structure shift. So let's get straight to the charts. All right, so the first thing you want to do, you want to go to the link in the description, look at Flux charts. This is a paid indicator. It is the price action toolkit by Flux charts. So we want to enable the fair value gaps, literally only the fair value gaps, everything else you can disable. And then we are going to look at the charts. Link is in the description. Flux charts, price action toolkit. This makes it just 10 times easier for you to identify your fair value gaps and everything. So let's have a look. So when we look at liquidity, it's, for example, at a high, we have a fractal high. So the candle on the right and left is lower than the middle candle, and that is a high. We identify this as a high right over here. And then a low is a candle that the left and the right is higher than the middle candle, and we identify these as lows, as you can see right over here. Each candle on the right and left is lower, so these are valid lows and these are valid highs. So what we want to wait for, we want to wait for price to basically take out liquidity, and then we enter from our first fair value gap. So when we zoom into this piece of price action and we play it a little bit forward, you can clearly see price is still touching these fair value gaps inside of the range. We are waiting for liquidity. There we go. We have liquidity swept, but now we want price to form a fair value gap to the downside to catch the reversal and the continuation down in this example. So let's have a look what happens. We are pushing up. There we go. We have our first fair value gap formed right over there. So when you are in live market and not replay, the fair value gap will form immediately. But as you can see, there is our fair value gap. And straight after this fair value gap, you can enter your trade with your stops here at this high. And then you can target the next levels of liquidity or a fixed 1 or 2 risk to reward trade. So let's just play one forward. As you can see, our fair value gap has formed on the indicator as well. So if we delete our one, there the indicator has formed it. And now let's see what happens to price. And there we have our target after we had a liquidity sweep. Same with this side here. So let's say, for example, so this is the market structure shift entry right over here. As you can see, we had a market structure shift and we closed below by forming that fair value gap right over there. Let's say you did not catch that entry. Then as you can see right over here, price respected this fair value gap. If we draw this out, if we extend it, we respected it, and immediately price left another fair value gap right over here. This one stops above the highs, and you can target a 1 or 2 risk to reward trade. And as you can see, that one played out beautifully as well. So let's look at one more example. So here is another example. You can see we have liquidity resting right over here. We have a low. We have a low right over here as well. And then we have our high there and internal liquidity that's resting right over here. Same right over here. So let's see what happens when we play price forward into this fair value gap. There we took the liquidity on the lower side. So now we're waiting for a reversal. So now we're just waiting for a fair value gap to form. There's our fair value gap that has formed. So you will enter on the close of this third candle right over here, and you'll put your stops at the low point, and you will target a 1 or 2 that is lining up actually perfect with this order block and this liquidity right over there. So let's see what happens. And as you can see, price went on immediately. If you wanted a more conservative entry, you will wait for this market structure shift right over here. We left a fair value gap right over here. And then if you entered on this fair value gap, put your stops below this low. Candle on the left and right is higher. So this is my fractal low. And then you target a 1 or 2 risk to reward trade. And as you can see, it perfectly went up to this liquidity pool right over here. So that's how easy it is. You wait for liquidity, you wait for that fair value gaps to form, and then you take your entry. You will see when you have your daily bias and you know your trend of the market, then your run rate will be a lot more than just entering randomly. Always make sure you have that in mind as well. Hope you enjoyed this video, and then I'll see you in the next one. Cheers.